Hi, this is Ganesh Joshi. Welcome to my YouTube channel Power Trading Coach. Today I'll be discussing about Securities Lending and Borrowing or SLB. So let's see what is SLB. Everyone knows about how to make the profit from a uptrend market. That means a market which is going up. But do you know how to make profit from a falling stock? Yes, it is possible to make the profit from a falling stock. Let's see how it is done. You have a stock, it is going down, and you want to make the money from the falling stock. So for that, what we need to do is we need to do a short selling in the stock. So many think that money can only be made in the uptrending market. However, money can also be made in falling stock. This can be done through a method called short selling. So you will be short selling the stock to get the profit from a falling market. What it involves? Short selling involves first selling the stock at a higher value. As you can see in the diagram, you can sell at the high. It is called short selling because you don't have the stock, but you will be able to sell the stock without owning the stock. That is possible. Then once the stock reaches its target, you will be buying, or this is also called covering the short, and you will be covering the short, or you are buying the short at a lower value. Example, in this example, short selling of the stock is done at a value of 1365. Then you will be buying when it is at 1325, which is your target. This is just an example. So difference between the selling and buying levels will be the profit. So you will be selling at the high value first, then buying at the lower value. The difference is the profit. So however, the short selling can be done only in intraday. That's the problem. You can only do this in the intraday. That means if you short sell the stock, you need to close that transaction on the same day. You cannot carry forward to the next day. That's the limitation. Now let us understand what are the limitations of the short selling. It is only allowed intraday. So if you have a view that a stock is going down and it may take more number of days to reach the target, then you cannot carry forward the short position in the stock to the next day. So what is the solution in that case? One of the solution is you can short sell every day. You can short sell every day. So first day you sold the stock in short selling mode. So from 1365 it came to, let's say, 1355. Now since it has not reached your target, still you want to continue, but you cannot continue intraday. So you have to close the position with profit or loss. Then next day you can again short till the target is reached. Every day you have to do the same thing. But if there is a gap down next day, you may miss some points, if any. So that is the disadvantage. So since you are going to short every day till the target, it involves more transactions, because every day you will be doing buy and sell into number of days until you reach the target. So that means there is an unnecessary cost. May not be able to cover all points till the target. The reason, as I told you, if there is a gap down on any day, you lose those many points probably, in case it gaps down and then reaches the target without filling the gap. So how do you profit from a falling stock? Is there a way I can make profit from a falling stock as a short seller? As a short seller. Also, if I hold a stock and it is going down, as an investor, is there a way for me to make the profit? Let's see. Okay, so both of these people will be looking for making profit from a falling stock. The short seller who does not own the stock, but he wants to short sell and make the money by selling the stock, short selling the stock without owning the stock. There is another person who is investor of the same stock, but the stock is going down. So how he can make the additional income from a falling stock? So what's the answer? The answer is Securities Lending and Borrowing, SLB. So let's see what is SLB. Security Lending and Borrowing, SLB. We have an investor who owns a stock. Let's call the stock as XYZ. So the investor is holding the stock XYZ and the stock is going down. There is a short seller whom we will call as borrower also, because now there will be a lender as well as borrower. Investor is called lender, short seller is called borrower. So these two people are looking for opportunity from a falling stock. So investor is holding the XYZ stock. Short seller sees a short opportunity in the XYZ because the stock is going down. Now, investor will lend the stock for a fee to the short seller for a fixed duration, whereas short seller borrows the stock from investor. Of course, for this he has to pay a fee. He pays a fee for the borrowing, and this fee whatever he pays, it goes to the investor, lender. So the investor who is holding that stock which is going down, he receives a fee for the lending and he lends that for a fixed duration. Now this is an extra income from idle portfolio because this stock is not generating any income for the investor. In fact, it is going down. But now through the SLB, he receives some sort of fee, which is an income for him or her. Now, what short seller does is he can go now and sell the stock in the market. He has borrowed that stock from the investor. He can go and immediately sell that, which is a regular sell, as if like he has the stock with him. This time he has a stock, but he is not the owner. There is a difference here. He is not the owner. He is just a borrower. So investor has not sold the stock to the short seller. He has not sold. He has only lending the stock. Short seller is not buying the stock. He is only borrowing from the investor. Now he has a stock in his demat and the stock is removed from the investor's demat. Okay, but it is marked as borrowed or lend. It is lending and borrowing. Okay, then the short seller will go and sell the stock. Now there is no restriction for him to cover this on the same day because he has a stock in his demat which he has borrowed from the investor, and this is allowed legally. Now this stock immediately the short seller will sell and he will wait for the target, and he has paid a fixed value, fixed fee for a fixed duration. So within that he need to return the stock to the investor, whether there is a profit or loss. So once the target is reached, the short seller covers the stock and with that he makes profit because he sells high and buys low. In between he makes the profit, but he has to return the stock to the lender. So he returns the stock to the lender. So what investor is getting now is he has already got the fee for lending. Now he receives the stock back into his portfolio. So this is not selling but considered as lending, and now it has been returned to the investor. So what short seller receives? Short seller receives profit or loss as applicable. Okay, if it reaches the target, it is profit. If it doesn't reach the target but it goes against him, it is a loss for him. Plus he also pays the fees for this. So if his profit is 100 rupees and he has paid a fee of 5 rupees for borrowing, his net gross profit will be 100 minus 5, that is 95 rupees before brokerage and other charges. Okay, and investor, he receives the same 5 rupees from the short seller and he gets the stock back in his portfolio. Okay. Whereas when this stock is with the short seller, all the benefits related to the stock are still available to the investor because he is the owner still. So he receives all the benefits like dividend, bonus shares, split, etc. All that is still available to the investor. He is only lending the stock, not selling the stock. So what are the advantages of SLB? Let's see. To summarize, additional income for the lender, which is investor. So that answers that question, whether anything is there for the investor. Yes, he can get a fee for the SLB. Lender can generate additional income from falling stock, otherwise which was in loss. Then which type of stocks are available for SLB? The securities which are available in the futures and options segment, that are available for the SMB segment. If one has bearish view on the stock, she can borrow the stock from an investor like this through SLB method and sell without the limitation of intraday. That is the advantage. And also, you may think, is there any risk involved in this? For the investor who is lending that stock, there is no risk because there is an agency called National Securities Clearing Corporation Limited, NSCCL. It takes care of the support and it provides the financial guarantee. The investor will not have any risk. It is guaranteed by the NSCCL. Okay, so there will not be any problem. Whereas there is one more advantage of this of SLB is, suppose if you have taken a position in futures or options, and if you wait till the monthly expiry in that stock, then you need to deliver the stock. You cannot do cash settlement. You have to deliver the stock. So if you don't have the stock with you, it will be a problem. In that case also, you can borrow the stock from SLB and return the stock, okay, without having a physical settlement. Okay, that's the advantage of SLB. So in the part 2, I will be discussing more about how to use SLB. Okay, I will give the examples and I will show you that. So in the part 1, I will be ending this here. Thanks for your support. I request you to all of you to join my channel and also like the video if you find it useful. So part 2 follows. You can reach me at YouTube, Telegram channel, Twitter, email, and also I have a stock market training. So if you are interested in that, you can reach me at the given URL. Thank you.